Do you speak crowdlending? Welcome to our podcast covering the crowdlending industry. Our mission is to provide you with all the insights from this market and help you make informed decisions. I'm Gassan, co-founder and CEO of Acredius. We are a crowdlending platform based in Zurich, Switzerland. I'm delighted to host this podcast and hopefully bring value to all our listeners. Hi everyone, my guest today is Jorrit van Rijswijk. Jorrit is Head Investment Analyst at Dynamic Credit Diversified Fund. Thank you very much for coming today, Jorrit.
Thanks for having me.
Excellent. Well, I have a lot of questions, but we will start with something simple. Tell us more about yourself, please.
Sure. So my name is Jorrit van Rijswijk. I'm an analyst at the Dynamic Credit Diversified Loan Fund. Joined Dynamic a little over a year ago, following a short career in banking, where I was predominantly involved with structuring and arranging warehouses for non-bank lenders. And in my current role, I support the European part of the Diversified Loan Fund strategy, or DLF, as we like to call it, which involves maintaining a view on European markets, originators, and most importantly, assessing loan performance and executing transactions.
Excellent. Well, you told us already a little bit about what Dynamic Credit Diversified Fund more or less do, but what Dynamic Credit does and what Dynamic Credit offer to its clients.
Yeah, so Dynamic Credit was originally founded in 2003 in New York as an alternative fixed income manager. And we are currently headquartered in Amsterdam. We have three distinct business lines, direct lending, asset management, and advisory. So our direct lending activity concentrates on the Dutch mortgage, owner-occupied mortgages and buy-to-let mortgages. And we have about 8.5 billion in assets under management. Okay. Our asset management team maintains two distinct strategies. One is the defensive ABS strategy, which has an 8-year track record and historically generated about 6% on an annual basis for investors. And our recently launched DLF strategy, which in a sense is an extension of the ABS strategy, but devised to invest in whole loans as opposed to a portfolio of loans in an ABS structure, but otherwise focuses on comparable asset classes. And Dynamic's advisory unit basically has two distinct activities. It serves as a valuation agent in the structured credit space and has a service that helps all sorts of originators like yourself to present their data and performance metrics in a standardized and comparable way, which in return helps investors to more easily compare originators and basically drive the investment decision. So it basically solves the problem of misalignment that may exist between investors that want to invest in the asset class and do not have the infrastructure or resources to assess these type of credits. So Dynamics advisory arm, it's called Loan Clear, they do.
Okay, brilliant. Jorrit, let's deep dive on this diversified loan fund. I think it's a great timing, by the way. But what was the idea behind it?
So, to be honest, the fund had been work in progress for much longer, as these type of projects always take longer to complete than you initially expect. So, the exact timing, there's no science behind it. But having said that, this is, in my opinion, indeed a very good moment to start this strategy with a crisis in mind and being able to conservatively ramp up a portfolio of good quality loans with improved net interest rate margins since a couple of months. Other than that, the strategy is also built to generate positive returns throughout the cycle with low volatility. And as such, we are also comfortable to started investing back in June. Well, many economies were still in lockdown. But it doesn't mean that it is still very challenging to implement a new strategy.
Very interesting. Speaking about the strategy, so where is the sourcing coming from? So you're using other, direct lenders or?
Yeah, so we predominantly source loans from non-bank lenders, although bank lenders are also not excluded, in Europe and the US. We explicitly target good quality loans, predominantly unsecured, from consumers and SME.
From consumers and SME. So that basically include the topic we're having here, which is crowdlending or P2P lending.
Yes, yes, absolutely.
Interesting. I mean, you said you started that in June, but definitely you have some experience in the past. So regarding investing in non-bank lenders, can you tell us a bit more about that experience? I mean, or maybe how is it in the Swiss market or even globally?
So the strategy basically tries to tap in of the possibilities that come with the rise of online lenders, and most importantly, the possibility to introduce positive selection and generate alpha. And by positive selection, I basically mean selecting the best loans from the best originators. And to explain a bit more about that, I always find it helpful to differentiate between the US and Europe. So in the US, the situation is that there's a limited number of very large originators that together originate a very significant amount of volume, and it is across the whole credit spectrum from very prime to almost subprime. So we don't very actively try to differentiate across originators there, but we do try to be very selective within the portfolio of each originator itself. Basically by running our own models that use all sorts of data and identifying the loans that we think are most mispriced. In Europe, the situation is a bit different. So we've seen, for example, that the larger platforms in the UK, Germany and France haven't performed as expected. And as such, we try to focus more on other jurisdictions and the more niche platforms that are out there. Try to identify good country asset class combinations, and within those basically categories, identify the originators that we think stand out and buy a selected number of loans from them.
Interesting. I mean, you said so UK, France and Germany did not perform as well as expected. Can you give us some more?
There's a number of larger platforms that I think we all know that have been around for a lot longer, but their setup doesn't allow investors to basically adjust their exposure to their own risk appetite. So if you invest, you basically take a vertical slice or just market exposure. And as such, the returns have been somewhat below what we think is reasonable. So we prefer settings where we can basically, within the origination of a lender, differentiate across, for example, risk rate or other attributes, and on that basis, outperform the broader market.
I see. Thanks for sharing that. So to give some perspective, we are today in Zurich, September 18th, 2020. The COVID crisis is still here and there, but still there, let's say. Just in your opinion, how is this current crisis affecting the industrial side, like direct lending or crowdlending, whatever?
Well, the way I see it, its impact is, in a sense, twofold. So on the one hand, the shorter term negative impact is maybe driven by that I think it's affected many players are still in the start and scale-up phase and have yet to show a profit. And if their business model or underwriting model is in a way flawed and performance deteriorates during this period, and they may see investor commitments withdrawal, which can cause serious cash flow problems. As an example, I think we've seen German lender Monedo file for bankruptcy for a combination of these reasons. And Having said that, a popular argument for not investing in the asset class has always been that most platforms had yet to see a true economic downturn as a real test of their sourcing and underwriting capabilities. And from that perspective, this whole situation should help to improve models and get investors comfortable with the asset class, which I hope is a longer-term positive consequence.
To the point, 100%, I agree. Now let's speak maybe or tell our listeners, what do you think are the main advantages of this asset class, especially coming, let's say, from an institutional investor perspective or from a lender perspective?
Yeah, so I think there's a very long list of advantages, of course, but there may be two key drivers that should be noted, which are yield and diversification. To give that a bit more color, we are very comfortable that we can achieve net returns of 5% within the asset class on a duration profile of 1 to 2 years, which of course compares very favorable to other traditional fixed income alternatives that are out there now, which may be yielding 1% or even less. And in addition, any institutional investor portfolio can be diversified across countries, lenders, and asset classes from the onset, because you have the possibility to invest in smaller loans, smaller tickets, and even partial loans from the start, which should help to basically address more idiosyncratic risks as well as country-specific risks and reduce volatility of returns. Yes.
Excellent. Well, Jorrit, I think I have a very difficult question for you now. It comes in general at the end. But well, I mean, I think everyone here is interested on knowing what's your favorite fruit. And don't try to trick me out with the diversification thing and I like all the fruits and so on. Others tried it, but no.
Okay, well, I want to do that, and it's also a bit hard to argue that I didn't see this question coming based on listening to the earlier recording, so I've given it some thought, and I think for me it's a combination of fruits, frozen fruits to be more precise, and I think they call it a smoothie bowl. So it's something my girlfriend and I started doing after visiting Indonesia. So what you do is you basically take all sorts of fruits, strawberries, bananas, blueberries, passion fruit, put them in the fridge one night, take them out the next morning, put them in a blender, add some granola and peanut butter, and it's the perfect start of the day. I can recommend it to everyone.
Just because today I'm in a good mood, so I'll accept that answer because that's not your favorite fruit. You're speaking about the cocktail. So the next one will give me, I don't know, tell me pina colada or something like that. But thank you very much, Jorrit, for all the insights you shared. And thanks again for being here.
Thank you for having me again. Thanks.
Excellent. Thank you. Goodbye, everyone.
I hope you enjoyed this episode. Thanks again for staying with us until the end. Make sure you subscribe to our podcast and follow us on social media so you never miss an episode. Please don't hesitate to send us your questions and comments at egregious.ch. Thank you.